Most people hear the words stock market and immediately think of risk, fear, or gambling. Some imagine people shouting on trading floors or losing money overnight. But the truth is, the stock market is not gambling. It is ownership in real businesses. The stock market is simply a marketplace where people buy and sell shares of companies. A share represents a small piece of ownership in a company. When you buy a share, you're not betting on a number. You are buying a part of real business that sells real products and services. Think of it this way. Imagine a successful coffee shop. Now, the owner wants to expand and open more locations instead of taking a loan. The owner decides to divide the business into many small parts and sell those parts to the public. Each small part is called a share. If you buy one share, you become a partial owner of that company. If the business grows and earns more profit, your ownership becomes more valuable. That is the basic idea of the stock market. Now let's understand why companies come to the stock market. Companies need money to grow. They need money to build factories, develop new products, improve technology, and expand into new countries. One way to raise money is by taking loans. Another way is by selling ownership to the public. When a company sells its shares to the public for the first time, it is called an IPO.
An initial public offering.
After the IPO, the company's shares can be freely bought and sold by investors around the world. This buying and selling happens in the stock market. Now the big question is, why do people invest in the stock market? The first reason is capital growth. If you invest in a good company and that company grows over time, the value of your shares increases. For example, think about companies like technology firms, automobile brands, or global consumer companies. As they grow their sales and profits, their share prices often grow as well. Now, the second reason is income through dividends. Some companies share a portion of their profits with shareholders. This payment is called a dividend. So even if you don't sell your shares, you can earn regular income simply by owning them. The third reason is protection against inflation. Over time, money loses its purchasing power. What you can buy today with $100 may cost $200 in the future. By investing in growing businesses, your money has the potential to grow faster than inflation. Now, let's talk about how the stock market works. Stock markets operate through organized exchanges. These exchanges provide a platform where buyers and sellers meet. Whenever someone wants to sell a share and another person wants to buy it at the same price, a trade happens. Prices move up and down based on supply and demand. If more people want to buy a company's shares, the price goes up. If more people want to sell, the price goes down. These price movements reflect how investors feel about a company's future. Many people ask, is the stock market risky? The honest answer is yes, it has risk. Share prices can go up and down in the short term. News, economic conditions, emotions, and global events can cause volatility. But here's an important truth. In the short term, the stock market behaves like a voting machine. In the long term, it behaves like a weighing machine. In the long term, strong businesses with good management, profits, and growth tend to perform well. Risk becomes much lower when you invest with knowledge, patience, and a long-term mindset. Another common myth is that the stock market is gambling. Well, gambling depends on luck. The stock market depends on business performance. When you invest, you analyze companies, their products, the revenue, the profits, the competition, and future growth. You're not guessing, you're making informed decisions. That is why long-term investors focus on quality business, not daily price movements. So, who should invest in the stock market? Anyone who wants to build long-term wealth, anyone who is willing to learn, anyone who understands that patience is more important than speed. The stock market is not get-rich-quick scheme. It is a tool to grow wealth slowly, consistently, and intelligently. People who respect time, discipline, and compounding often benefit the most from investing. The stock market is a place where ownership of business is exchanged. It allows companies to grow and investors to participate in that growth. It rewards patience, knowledge, and long-term thinking. The stock market is not about predicting tomorrow. It is about believing in the future of good businesses. And when used wisely, the stock market can be one of the most powerful wealth building tools in the world.